Have you ever heard of I-bonds? Do you know how they work? In this video, we'll explain everything you need to know about I-bonds and why they can be a good addition to your investment portfolio. Watch this video until the end to learn how to invest in I-bonds. Inflation is a naturally occurring phenomenon that can reduce the value of your money over time. Unfortunately, global inflation is expected to rise significantly in the coming years, making it even more important to protect your purchasing power. That's where I-bonds come in. I-bonds are a type of bond issued by the U.S. Treasury that provides returns based on a composite rate of inflation and fixed rates. The current interest rate for I-bonds is 6.89%, which will be in place until April of 2023. This rate is determined by the U.S. Treasury and is adjusted every May and November. One of the great things about I-bonds is that they can help you take advantage of compound interest. The interest you earn is added to the value of your bond twice a year, which means your money can grow even more over time. But there are a few things to keep in mind regarding I-bonds. For one, they can't be cashed until 1 year has passed. And if you cash them before 5 years have passed, you'll lose 3 months worth of interest. So it's important to hold on to your I-bonds for at least 5 years to get the most out of them. In addition to their potential to protect against inflation, I-bonds are exempt from state and local income taxes. This can make them even more valuable if you live in an area with high taxes. So, are I-bonds a good investment? They can be a great addition to any investment portfolio, but as with any investment, it's important to research and ensure they align with your financial goals. What do you think? Have you considered adding I-bonds to your portfolio? Let us know in the comments section below. Have you ever wondered when your I-bonds will mature? And what does it mean for your investment when a bond reaches maturity? Let's dive in and find out. Every bond has a maturity date, which is the date on which the issuer, in this case the U.S. Treasury, agrees to pay you the interest you're owed for your investment. When an I-bond reaches maturity, the issuer will pay you its face value. But what about before the maturity date? Can you redeem your I-bonds before then? The answer is yes, you can redeem your I-bonds as soon as 1 year has passed. However, it's important to note that you'll forfeit 3 months of interest if you redeem your I-bonds before the 5-year mark. So, when do I-bonds mature? The maturity date for I-bonds is 30 years. That means you can keep your I-bonds and continue to earn returns on them for up to 30 years. But it's important to remember that you don't have to wait until the maturity date to see returns on your I-bonds. You can redeem them as soon as 1 year has passed, as long as you're willing to forfeit some interest potentially. If you're unfamiliar with I-bonds, they're a type of bond issued by the U.S. Treasury that provides returns based on a composite rate of an inflation rate and a fixed rate. They're a popular choice for investors looking to protect their money from inflation, but that's not the only reason to consider them. One of the major benefits of I-bonds is their tax exemption at the state and local levels. While they are still taxable at the federal level, there is an important exemption to consider. If you use your I-bonds to pay for higher education, any profit you make from them will be completely exempt from taxes. This makes I-bonds a great option for anyone looking to save for college. In addition to their tax benefits, I-bonds also offer flexibility regarding reporting and paying taxes. According to the U.S. Treasury, you can either report each year's earnings or wait to report all the earnings when you redeem the bond. This means you can use the money from your I-bonds to further invest in other assets. Another big advantage of I-bonds is their low risk. As the U.S. Treasury issues them, there's virtually no risk of default. In fact, the U.S. Treasury has never defaulted on the payment of its bonds, so you can feel confident in the safety of your investment. Finally, I-bonds are highly accessible. It's easy to invest in them, as you can do it electronically starting at just $25 with no maximum investment limit, as long as you don't invest more than $10,000 per year. Plus, you can invest any amount you want, so if you have exactly $48.32 to invest, you can do so. If you've decided that I-bonds are the right investment for you, you'll be glad to know that it's easy to buy and redeem them. You can buy I-bonds for yourself, your children, or even as a gift. To buy I bonds, you'll need to create an account on Treasury Direct if you don't already have one. This straightforward process involves providing your tax ID number and bank account or routing number. Once you have a Treasury Direct account, you can choose the Buy Direct option, select I bonds as the type of bond you want to purchase, and fill in the necessary information. It's like buying an item or paying for a subscription online. If you want to gift an I bond, all you need is the recipient's full name, tax ID, and Treasury Direct account number. Redeeming your I bonds is just as easy as buying them. Simply go to your Treasury Direct account, choose the Manage Direct option, and follow the link for cashing securities. From there, you just need to follow the instructions to redeem your I bond and get your money back, plus any interest earned. We hope this clarifies any confusion about the maturity of I bonds. Do you have any other questions about this investment option? Let us know in the comments. And don't forget to like, comment, and subscribe to our channel for more financial education content.